Costco remains one of America's most trusted retailers, but an increasing number of loyal members say something has changed. Across social media, customer forums, and consumer reports, shoppers are raising concerns about rising prices, product changes, crowded warehouses, and declining shopping experiences. While Costco continues reporting strong sales and member loyalty, these growing complaints suggest the company faces challenges it has rarely encountered before. Explore whether these frustrations are isolated incidents or signs of broader changes affecting one of America's most successful retailers. On September 1st, 2024, Costco raised its annual membership fees for the first time in 7 years. The Gold Star membership climbed to $65, while the executive tier jumped to $130. For many households, these new numbers triggered a simple but pressing question. Does a Costco membership still pay for itself? The executive tier, which promises a 2% cashback reward on most purchases, now requires about $3,250 in yearly spending to break even on the fee. For bulk shoppers, that threshold is reachable, but those who visit less often or buy fewer essentials may find the math less convincing. Inside the company, leaders like Chief Financial Officer Gary Millerchip described the increase as a necessary step to keep investing in the member experience and to help absorb rising operating costs. Chief Executive Officer Ron Vacris emphasized that the higher fee would allow Costco to maintain its pricing power, shielding members from the full impact of tariffs and inflation. Their argument, a modest increase today is what keeps everyday prices lower tomorrow. Still, some members have begun questioning whether the savings are as strong as they once were, especially as prices on many staples have crept up. The fee hike stands as a visible test of loyalty and value, forcing shoppers to weigh tradition and trust against the realities of their own budgets. A walk through Costco's aisles today reveals a new reality for regular shoppers. Everyday staples are getting more expensive. The price of eggs, a weekly purchase for many families, has climbed about 8% over the past year. Cleaning supplies, items like disinfecting wipes and multi-surface sprays, have seen shelf prices rise by roughly 6%. These increases are not isolated incidents. Company earnings reports show comparable sales growth in the 5 to 7% range, much of it driven by price hikes in core categories. Behind these numbers are global forces. Commodity costs have surged, tariffs on imported goods have added new layers of expense, and logistics costs remain elevated. Costco's leadership points to these pressures, explaining that even a retailer famous for low margins cannot always absorb every cost. While Costco's prices still often undercut those at big box rivals, many members say the difference feels smaller than it used to. The promise of unbeatable value is now tested at the shelf, not just at the membership desk. Shrinkflation has become a quiet force inside Costco's warehouses, changing the value equation in ways that often escape notice at first glance. Since 2022, shoppers have reported more Kirkland Signature and national brand packages looking suspiciously lighter or smaller, even though the price on the shelf barely budges. A bag of Kirkland chocolate almonds that once weighed 16 ounces now sits at 14. Golf ball packs that used to include a dozen now contain 10. Across the board, the price per ounce or per item has crept upward, even when the sticker price suggests a deal. Costco's leadership rarely addresses these changes directly, instead emphasizing that operational savings and supplier negotiations allow them to lower prices when possible. But for members, especially those who see Kirkland as a symbol of trust, the shrinking packages feel like a breach of the unwritten promise of bulk value. Social media chatter has amplified this awareness, with side-by-side photos and detailed breakdowns of old and new sizes drawing thousands of comments. In a store built on the idea of more for less, getting less for the same price cuts deeper than a simple price hike. The question grows louder. If the bulk is shrinking, is the value shrinking too? Costco's warehouses are now busier than ever. At the end of fiscal year 2025, paid memberships hit 81 million, a 6.3% jump from the year before. Yet the company opened only 14 new U.S. stores that year, leaving the same familiar buildings to absorb a much larger crowd. On weekends and after work, parking lots fill quickly and shopping carts jam the entryways. For many, waiting in a line of 20 or more just to enter has become routine, especially in high-traffic neighborhoods. The rollout of electronic card scanning kiosks in 2025 was meant to tighten security and prevent non-members from slipping in. Instead, it often creates a bottleneck at the front door. Viral social media posts show frustrated shoppers queued up as scanners struggle to keep pace, with staff stepping in to check cards by hand when glitches occur. To keep traffic moving, Costco has added more entry lanes and stationed larger door teams at peak times, but the sheer volume of shoppers still overwhelms these fixes. The tension is clear. Membership growth outpaces the expansion of physical space. While management points to ongoing investments and promises more upgrades, the reality for many is a crowded, less convenient shopping trip. For some long-time members, the warehouse that once felt like a hidden gem now feels more like a busy commuter hub. Missing products have become a familiar frustration for many Costco shoppers, but the pattern is less about stocking errors and more about the core of Costco's business model. The company deliberately limits its product selection, carrying around 4,000 SKUs compared to tens of thousands at a typical supermarket. This tight assortment creates what insiders call a treasure hunt experience. Shoppers never know if a favorite cheese, limited edition snack, or discounted electronics bundle will be waiting on the next trip or already gone. Seasonal items and higher-margin goods often rotate in and out quickly, pushing older or slower sellers aside with little warning. When a beloved item vanishes, it's not always a supply chain mishap. It's often a calculated decision designed to keep shoppers coming back in hopes of spotting the next surprise deal. This approach fuels excitement and urgency, but it also breeds disappointment when a must-have product disappears overnight. The same strategy that draws people in can leave them scanning the shelves, wondering if the thrill of the hunt is starting to outweigh the satisfaction of finding what they came for. The food court at Costco is more than a quick stop for a cheap bite. It's a ritual that defines the warehouse experience for millions of members. The $1.50 hot dog and soda combo, untouched by inflation since 1985, stands as a cultural promise that Costco will always deliver at least one unbeatable deal. But around it, the menu has changed in ways that many regulars feel deeply. The Polish sausage, churro, and the beloved combo pizza are gone, each cut sparking disappointment and debate both in the aisles and online. In early 2025, a Change.org petition calling for the return of these items drew nearly 45,000 signatures, a testament to just how personal these decisions feel for shoppers. Company leaders point to rising food costs and the need to focus on higher-margin menu items, introducing new offerings like specialty salads and premium coffee. For some, these changes are a practical response to economic pressure. For others, they represent a fraying of the emotional contract that made the food court a symbol of value and community. Every menu tweak is now weighed not just as a business move, but as a referendum on what Costco stands for in the eyes of its most loyal members. Self-checkout was introduced at select Costco warehouses as a way to ease long lines and speed up the shopping process. In 2025, the company added 2 new self-checkout units to many stores, hoping to handle a surge in member traffic. For some, these kiosks offer a faster exit and a sense of control. For others, the experience is anything but smooth. Machines freeze, barcodes misfire, and lines can stall as a single attendant scrambles to help multiple frustrated shoppers. The push for automation has also changed life for employees. After early backlash over reduced staff at registers, Costco temporarily increased cashier staffing to keep pace. Even so, the workload remains heavy. Associates report more overtime and describe a shift from weekend rushes to constant all-day pressure. The company's fiscal year 2025 safety report logged a 3% increase in recordable workplace incidents, a sign of rising strain. Costco's pay and benefits still rank among the best in retail, and many long-tenured workers express pride in their jobs. Yet the demands of monitoring self-checkout, dealing with high traffic, and managing customer expectations have left some feeling stretched thin. These challenges mirror broader trends across the retail industry. where labor shortages and rising automation often mean fewer hands on deck, even as the crowds keep coming. Costco's online store promises the same bulk value as its warehouses, but the reality is more complicated. Prices on Costco.com often run 5 to 10% higher than the in-store tags, a difference driven by shipping, handling, and fulfillment costs. For some items, the convenience of home delivery comes at a noticeable premium. During peak shopping periods, especially the holidays, shipping delays can stretch to 2 or even 3 weeks, far longer than many rivals. Members who turn to the website for hard-to-find or out-of-stock products sometimes find that the digital experience doesn't fully replace the warehouse advantage. While Costco's digital platform expands access, the higher prices and slower fulfillment can leave online shoppers weighing the trade-off between convenience and true savings. Costco's numbers tell a story that contrasts sharply with the frustration voiced by many shoppers. In fiscal year 2025, the company posted net sales of $269.9 billion and collected $4.8 billion in membership fees, income that now accounts for more than half of operating profit. Renewal rates remain among the highest in retail, hovering above 92% even after the latest fee increase. Gross margin sits at a lean 11%, underscoring Costco's reputation for low markups. Yet for the first time, Sam's Club edged ahead in the American Customer Satisfaction Index, with a score of 80 to Costco's 78. The gap between rising complaints and strong loyalty raises a central question. Are these growing pains in a turbulent economy, or signs of deeper change in what members expect from their warehouse club? As Costco raises membership fees and tweaks its model, the balance between value and experience faces real pressure. Inflation and shifting expectations test even the strongest brands. How Costco adapts now will shape not just its future, but the standard for what American shoppers demand next. Share your thoughts below.